going to show you why, because we have selfish reasons for that. So I get to talk about our continuous improvement and to try to solve our audit findings. Well, I'm going to pick on the top 10 because by definition they're the most common audit findings, and so I hope that this will be helpful to you and to give you some suggestions and ideas. Many of you, I hope what you'll do is say, you know what? That is not my problem. I do that one right. But maybe there are tips that you can also learn from if you're one of those who wants to take it to the next level. So the top 10 audit findings in 2021 were these 10, and we had a total of 1,814 audit findings. The good news, and this is your work, 2 years later, I'm so proud of you. I'm so proud of you. Look how many audit findings we had less. 600 out of 1,800. 1/3 less. You know, I'm going to tell you, just give y'all a big hand. Because you know what? You have worked so hard to do this. You really, really have. You've learned a lot. You've grown. You've been challenged. And you made it through. And you know, you can look back and say, I did a good job. It was hard. I didn't think it was possible, but it was. Great work. So the things that I wanted to point out to you, like what changed? You can see that a lot of them didn't, but some of them did. And what rose to the top to number 3 was late filing of the report with the legislative auditor. So what Barry talked about, you know, we're brainwashing you for these 4 hours, right? So Barry talked to you about what the law says and getting ready for that. The auditor talked to you more about that, more from the auditing perspective to help you understand, to remove that finding, you know, and the answer always is, you know, just start earlier. We wish we always could start earlier, you know, and get started on, that's what I always look at when I say, why am I late on something? I need to start earlier, especially on big projects with that. And then the last 2 findings in 2023, you know, they're making their way for the first time into the top 10. So I've never presented on the improper use of public funds and I'm not going to go into public bid law because I am not the expert. I'm just an accountant. And like I say, we have a whole 4 hour, you can do YouTube, you can go look at the handouts on our website for that. So I'll hit that at a high level as well. So let's go over our top 10 audit findings and see what we can do. Inadequate internal controls is common. Auditing standards in smaller organizations, it's tied for our top 2 in the top 10 audit findings with improper segregation of duties. We're going to go over that one too. And so in smaller organizations where you don't have big staff in the finance office, you see this. Improper internal controls, sometimes it's due to too small a staff. We're going to look at that when we look at segregation of duties to find a way around that. But we also can look at some basic internal controls that people of all sizes need to have. And so if you're a little government, and I wish I had a visual because I need to tell you about Tinkerbell. Tinkerbell lives 2 doors down from me, and she is a little chihuahua. Now, anybody who has little chihuahuas know they have the biggest personality. Nobody told them they were little. They think they're big. Tinkerbell, when she's on the street, she is chasing cars. She is chasing them ferociously. She chases my car ferociously. So I always just kind of stop, let her settle down, try to find the little thing wherever she is. I don't want to hit her. I just want to pull into my driveway. You know, and my point is, she's little, but she acts big. She acts big and bad. And so even if you don't have a lot of resources, there's still a lot of things on internal controls that you can do. So what are internal controls? I like this definition. COSO has a definition. To me, it's really kind of technical, and Stephen Gautier has a great way of saying what it is. And what is it? It's the combination of 3 things. You can't have some without the other. You need all 3. You need people, you need policies, and you need procedures. All 3 of them. To do what? What is it? What is your goal in internal controls? You need to be able to know, how do I know that my government is operating effectively and efficiently? How do I know that my financial reports can be relied on? How do I know they're accurate without proper internal controls? Oh, well, you know, we just put the numbers, it is what it is. No, we know because we have internal controls where we do reconciliations, and we know beyond a shadow of a doubt those are right numbers, right? How do I know the things Dennis talked about, Barry talked about, that I'm in compliance with the laws? Internal controls help us say, I know because I have the right controls in place for that. So that's a way to think about that. And I know yesterday Thomas talked about the fraud triangle. The point I want to make in this is the opportunity point. And this is the most common point you see on this for audiences like us. I cannot control somebody's financial pressure. I have nothing to do with that, except in my own household. I cannot control someone's rationalization, what they're thinking, what they're feeling, how they can rationalize that that's good behavior when it's really not. I can't do that. I can try to be persuasive, but I'm not going to be successful. But what you can do is control that opportunity. And the way you close that door, you don't want it to be a little bit where somebody can stick their toe in, because then they can stick their whole foot in, and then they can walk through a door. You don't want that. That's the door that you need closed, and you do that with your proper internal controls. So there is the standard internal control thing is called the Committee on Sponsoring Organizations of the Treadway Commission. This came out, I think, in the 1970s, maybe 90s, I forget. But anyway, it was perfected in 2013. First it came out and it was not integrated, okay? So let's take a look at this. When it first came out, we had the 3 objectives at the top. How do I know? Number 1, that I'm operating efficiently. 2, that my reports are accurate. And 3, that I'm in compliance. We see those along the top. Those are management's objectives, right? And then the 5 control elements down the front. What made it, and we're going to go through those, what made it integrated is to say, and I was working in government when this one came out, and it really opened my eyes. Because before it was integrated, everybody thought internal controls were in the finance office. They were finance office rules. That's what those crazy people did. They make us get approvals. If I didn't get an approval, they're asking for it. And lo and behold, if you ever work with folks who work in maintenance, those people are not paperwork people. They're just not paperwork people, you know, but you're working on their last nerve saying, I need that receiving report. I need you to get me the invoice when you went and picked it up, you know, and they're like, it's in my truck, and then it comes out and it's full of dirt and dust and it's torn and whatever, you know. But this, when they integrated it, they said it doesn't matter. It's not just in the finance office. It's everywhere. It's everywhere, okay? It goes all throughout. It's at the CEO, at the entity level, division, operation, down to each one of our desks. So there are 17 principles of internal control centered around those elements. These are things, now I know this is kind of abstract, but I want you to think about these things in your own organization and how well are you doing in this. So the control environment, that's what Dennis talked about with the CFO who was not worried so much about internal controls. That's why he's like, I don't think so, because of the control environment. So what do we need to do? To the mayors, to the council members, to the department heads, to people in the finance office, the ones who handle cash, you're part of the control environment, because how you act, the values you have, and how you are, that permeates all through. Thomas will tell you stories, and they're on our website. You can go read them, okay, about CEOs who had a bad internal control environment, charging personal things on credit cards, for example, and it permeates throughout. So if that's an example and the CEO's charging his personal stuff on his credit card, now I'm a department head. Like, that guy's doing it, I'm gonna start doing it. You see how it permeates through the whole organization? This is so important. So what do we need to do? Number 1, we need to have that commitment to integrity and to ethical values. Sometimes you are in an ethical dilemma and you don't know you're in an ethical dilemma. And I've been there and I don't realize till I'm about 3/4 of the way through or more, or sometimes after I'm through it, you know what I just went through was an ethics problem. I'd rather have an accounting problem than an ethics problem. But you have to know when you're in there, when there is a conflict of interest, when your little red flags are flying and you're saying, I don't think this is sounding right. This doesn't just kind of feel right. I can't put my finger on it. Doesn't feel right to me. Those kinds of things. So you have to have the commitment to that. It has to start there. A lot of places have a code of conduct. You know, this is how we expect you to behave. This is how it's a great thing to have. It's a very good, it's a common anti-fraud deterrent. It's just having a code of ethics. Why? Because a lot of us work because we have bills to pay. And if we were independently wealthy, we'd be like Dennis, we'd be on the beach, right? But we're not. We have bills to pay and we need our jobs. We don't want to get terminated because of a violation of the code of ethics. So it can be a good deterrent. I'm gonna find another way to get that money besides stealing because I really need my job. Independence from management, why? Roles and responsibilities. Where the governing body, you have to have this independence. Can I tell you? Mike Wagasback is the legislative auditor of the state of Louisiana. There's 50 of these guys. There's only 50 in the entire country. He's one of them. Do you think he has oversight? Yes, he does. He does. He has a governing body called the Legislative Audit Advisory Committee, LAAC, and they meet a few times a year. And they're overseeing the work that Mike Wagasback does. And the rest of us, we listen when the oversight body meets. Why? Because if they think of something that our office should be doing that we're not doing, they want us to do that. Guess what? That's us who have to go back and implement what our oversight body does. Everybody has oversight, okay? Everybody has oversight. Just accept that, and I can tell you one thing, you can really relish in that because they are also your helper to help you get things right. And then, what do we say? We love to be accountable. So you get to go before them and say, you know, I did what you asked us to do, you know, and look, it's great results kind of things. The structures and the reporting, I got to talk faster because I only have till noon, are about your org chart. When your org chart is not quite right, okay, then you're going to have problems in your internal control. Okay, I can give you one example where I worked, where when I started working there, I was the CFO, and so then the governing body meets, and what I did was create financial statements, and I gave them to the president. And the president went before the governing body and said, everything's wonderful, it's great, here are the financial statements, look. And then they went on to the next topic. And the governing body said, I don't think we like this because you're not objective in presenting the financial statements. You as president are gonna put on rose-colored glasses and say everything's fine. It's not fine. So we want your CFO. I'm like, me? Yeah, me. I had to get up there and say, look, our sales were a little bit lower this month than what we were expecting, but here's what we're doing about that, or here's how that happened, you know, or something like that. They wanted that objectivity. It's important in your internal controls. In the morning, yesterday, our first session, what was that about? Talent. You guys are here because you want to increase your competence. And you want to be well-trained and equipped with knowledge so you can go back and perform your function well. And then we talked a lot about holding people accountable. So the next element is risk assessment. This is a fancy way of thinking about your organization and saying, where are our troubled spots? Now, let me tell you, this is not personal. This is not personal. So I worked at a school district. We had, like all of you with parents with kids in school, you have to send money to school all the time with your kids. The money's collected at the school, deposited. The school, it's called school activity funds in a public school district, and they would get audited every year by an audit firm. My job in the summer was to do the risk assessment. So I had all of these factors. One of the factors, I'm saying it's nothing personal, but I'm going to have a higher risk if I have a new principal. If I have someone who's never been principal before, she might not know what she's looking at. She might not know how to review a bank rec. She's going to be high risk. Nothing personal. She may have been great. Teacher of the year, it doesn't matter. This is not personal. This is objectivity, okay? If I had a new bookkeeper, it was the same way. You know, you're going to think about all of you, where you are, like the things that you didn't know when you started out and the things that you know now. Pretty phenomenal how much you've grown, you know, and some of you have, like, you know, scars to show. Others of you, you know, you learned well. You had a great mentor who taught you well, and you didn't make so many mistakes, you know, but a lot of us have to learn the hard way from the school of hard knocks. So higher risk. So that's what you do, and you think about that. In your organizations, maybe you have a new department head. Maybe it's even something like we're putting in a new ERP system. We have a new procedure now. You know, it could be any number of things. You have to think about where those are, and then you have to learn how to address those. You also, it's required. You have to think about fraud in your organization. So, as Dennis said, a fraud deterrent is not that we employ fine Christian people. He gave us an example of that, right? So you have to consider, where could it happen? What's not so good? For me, when I thought about this, I always went to automation. What is a manual process, and how can I get that automated? You know, a big one for me, I remember when I did it, because I got a call from a school bookkeeper at a high school. She says, we have so much cash, I need to hire one person just to count cash. Over $1 million at the time went through that high school in a year, pretty much all cash, okay? And that's what made me say, that's a problem, and that could be a fraud problem. What am I going to do about it? What we ended up doing was implementing a program where we accepted payment by credit card. And in our district, we got $8 million worth of cash on credit cards instead. That helped to reduce that. Think about that. That's the kind of things you think about, and assessing those changes in there. Okay, our control activities. This is what we do day in and day out. Sometimes they work, sometimes they don't, which is why we have to take a look at those and monitor those. Part of our control, these are authorizations, reviews, things like that, complete documentation. Part of that is also technology. So your auditors go look at how your technology is processing transactions. That's part of what they do to make sure that that's working right. Why? Not because you bought bad software. Doesn't have to do with that. You spend $1 million on your software, it's good. It may have been set up wrong. It may have not been configured correctly. Somebody may have, I just heard a fraudster talk at our firm training at the end of January, and he talked about they did a new ERP system. He was CFO. He had administrative access while it was being implemented. However, the administrative access should have been stopped once it was fully implemented for the CFO. Only the technology guys should have that, right? It never was stopped, and he committed a fraud. Okay, so they're looking at those kinds of things also. All right. Information and communication, like we talked about, you have to communicate this stuff. It's no good sitting on somebody's desk. And then how do we communicate this? Through our policies. We talked about that yesterday. Making sure all employees know what they are. Through our written accounting procedures manual. Internally, making sure that we know that everybody knows their role in that stuff. Telling our external parties. So let me just say this. If you use a contract accountant, so let's say I'm a contract accountant for a couple of little bookkeeping clients. So they get the money and they deposit it, they process their payroll, and they write their bills. My job is to go in, fix all their mistakes, post journal entries, reconcile their bank statements, issue correct financial reports on time for them, okay? I'm part of their internal controls, and I need to know. And so I ask them when I get a new client, I ask, because I got a new client about 2 years ago, okay, who's allowed to authorize invoices? Who's allowed to do this? Who do I go to? What am I looking for when I'm seeing payroll and time cards and things like that? You have to learn that. So you do have to communicate it to them as well. It doesn't absolve you of not having internal controls just because you outsource that, okay? Monitoring, think about it like a smoke alarm. A smoke alarm does not put out a fire. It alerts you that there's a problem. And that's what monitoring does. So you want to look. It's not enough to have them good in writing. You have to make sure that they're being carried out. effectively. That's what we talked about, accountability, communicating, because a lot of times I know for me, a lot of times in my world was I just didn't know. I just didn't know that I was supposed to be looking at that or something like that, and then I learned that I did. And working through those control deficiencies. So when you find out that something's wrong, you have to fix it. You don't just sit there. You solve your audit findings, like Barry said. You don't let these things fester, because it can grow into, and you could be the fraud story. You don't want to be the fraud story. You want to be the story on good stewardship of public funds. So GFOA does have internal control recommendations. They have great policies. GFOA is Government Finance Officers Association. It is the premier membership organization for accountants and finance professionals who work in state and local governments. They have about 25,000 members. They have a wonderful website, which is gfoa.org, with so many resources you can't see straight. And but almost anything that you want. Theirs is at a higher level than the LLA is. Resources are, so you have to be ready for that. But there's a lot of things out there. They have a slew of best practices, and you may want to go look at these. Every time, I thought I knew their best practices. Every time I go to the website, I find a new one. I say, this is so good. And I wish I would have known about it when I was a finance director, because I would have done this. It made sense, but I didn't know, and I wasn't doing it that way. So go take a look at those. Okay, we talked about our control activities. We know that these are written in our accounting procedures manual. These are the things that we do every day, and this is the way I think of those things. That's you and me at our desk. We are swamped. We've got papers all over our desk. We got our computer open, and people are sending us emails and asking us questions. When something's blinking at us, like what's that? No, you're not going to update my software just now. And then you got somebody calling you on the phone, saying, come down here, explain this, whatever. You're going crazy. You try to catch your own mistakes. You look at your own work and try to catch them. If you don't, I hope that you are blessed with a good finance team. That's still your team, that's still in your department that's going to find it, okay? So somebody else is reconciling an account and says, Diane, I think this journal entry is wrong that you posted. And I remember this conversation. I'm like, oh, no, it's not. I know what I'm doing. I know accounting. Yeah, it is. And you know what I got wrong? I debited and credited the wrong account. And she figured it out because she's reconciling, and she says, it's off by twice the amount of this journal entry. Huh? What's that about? And went and asked the person who wrote the journal entry, who said, I did it. That's the last thing I did at 9:30 at night when I left last night. My fault, let me fix it. I'm blessed with a good finance team, okay? They caught it. If they don't catch it, God forbid, it's a little worse now. You're going to your governing body, but it's still within your own organization, right? And maybe they'll recognize it. Maybe you send it to the CEO before you ever give it to the accountant. The CEO's like, this number doesn't look quite right. Did we really collect that much in ad valorem taxes? Oop, one too many zeros on my journal entry. Nope, we didn't. And you fix that stuff. That's all good. Lo and behold, you don't want it to get to the press. You just don't want it to get there. So that's kind of how I think about them. So let's go through, these are the major accounting cycles. We're going to go through these when we talk about segregation of duties, because I have to get going. And so think about this as you're writing your accounting procedures manual, as you're thinking about this. Just go back to what we learned in elementary school about the 5 W's. Now, the auditors in the audience and the analytical people saying, Diane, honey, there are 6 numbers on the screen and there's an H. I know, but we just call it the 5 W's, okay? So think about those as you're writing those and be specific. And that's why, if you think about that, it's not enough that bank recs need to be done. You need a when. When do bank recs need to be done? You need a where. You need all of that. So as you're writing through. And then, courtesy of our friends at the Washington State Auditor's Office, they have a great resource on segregation of duties, and they basically said, think about here are the golden rules, and we've talked about that. Segregate incompatible duties. Have those compensating controls when you can't adequately segregate, like review. Review is a compensating control. In my example, I get a journal entry wrong, but somebody reviewed it and caught it. Reconciliations, things like that. Document your controls. We talked about that yesterday. You need to have that consistent and effective supervision. If you are a supervisor, if you're thrown into being a supervisor and you don't think you're adequately prepared, I was there once and I was not adequately prepared, but I can tell you management books got to be my favorite books, and I would read them and I learned so much from them. I really did. And just sit down and think, what are the characteristics of your ideal boss? You know, think about who your worst boss was and why. A lot of times when you think about those two extremes, look at yourself. How do you respond to them? It tells you how you want to be supervised. And what you have to realize when you're a supervisor, if you supervise 5 people, it's not one way to supervise all 5, because they're 5 different people with 5 different things going on in their lives, and they need to be supervised differently. If you're new to it, just be sure to get the training, because there's a really, really nice way for my senior accountant to come into the CFO and say, Diane, I think you posted this journal entry wrong. She didn't say, what are you, stupid? How long have you worked here? I don't even think you're properly qualified to do this job. She didn't say that, right? She said, Diane, I'm kind of puzzled. I think this could be the problem why this account's not reconciling for me. That's great. I'm okay with that. I'm perfectly okay with that. So we have to learn those things. And then that access and constantly reviewing and reevaluating. So we went over this yesterday. I won't belabor us with that. So let's go look at improper segregation of duties. Here it is in a nutshell. We have our 6 golden rules, but here's what to think about. That little red sports car that you always wanted. And that's the acronym to separate all these things. Custody, approval, and authorization are the A. Recording and reconciliations are the R. Those are 2 separate things, right? So that's what you want to. So think in your mind. Now, what does that custody? That means I possess it. Like I'm in charge of inventory, you know, of the meters or something like that. That's custody for that. Recording it in the accounting software. No matter how big, how small, at least 2 sets of eyes. When you're bigger, you can have 4 sets of eyes. You can have that properly segregated, and you can have 4 or 5 sets of eyes, right? But when you're smaller, maybe not. You just have 2. Guess what? You also go back and forth. I do step 1, you do step 2, it comes back to me to do step 3, kind of thing. We'll see some of that. So those are the duties that we need to keep segregated. So let's go through. I want to be, let's see, I have an hour. Okay, I'm going to go through this one fast, but there are many of these. This one I'll take time. The other ones I'm going to go through a little faster because we have to get to the other audit finds. I got to get you out at noon. Some of y'all have really important lunch plans for that. So where is this in the cycle? Collection. Collection is the big thing. Custody, I am actually collecting all that cash. Okay? So there are so many things I cannot do when I collect cash. It takes 2 doggone slides to say, think about these slides and think about your job descriptions and think about the size of your office and your people and their expertise and their experience and all these things. Because these slides can help you write good job descriptions, can help you get that segregation of duties that you want. In the course of things, they'll also be cross-trained, because somebody is not going to have just a lane of accounts payable and nothing else if you have a 2-person office, right? Accounts payable is also going to have to pitch in on accounts receivable, may have to pitch in on payroll. Okay, to get that proper segregation of duties. So now they're exposed to a lot of things. That helps when we take vacations for that. So here in the cycle, they all kind of start at the top. You have your governing body. They set policies and procedures. In this one, you have accounts receivable, who's going to be, who has the accounts receivable function of billing, collecting. Those are actually two separate things. Accounts receivable is making sure that the amount billed is correct and all of that stuff, and then you have the payments coming in. Okay, so I have billed and now I have the payments coming in. So I'm going to separate my payments in the mail from my cash. and that's the one that's in yellow. And then you have different people performing the rest of that cycle. A different person prepares the deposit, a different person takes it to the bank, and a different person reconciles it to the bank system, reconciles the bank statements, and does the customer refunds, okay? You have to segregate all of that. So what does that look like? If you have somebody whose job it is to receive payments and produce the receipts, this is the list of things they ought not be able to do. Now, somebody like Thomas has a story for every one of these line items. I do not. But let's just say this closes that opportunity that we talked about. This closes that door when we say, nope, I need different people to perform these things. Now, some of you are saying, I don't have different people, but if you think about it, maybe you do. Maybe you have the mayor's assistant who can help out with some of these things. Maybe you have department heads who can be taught and look at some of these things. Maybe departments heads have assistants who can help with some of these clerical tasks. You have to think outside the box. Maybe you pull in your council members and they have to earn their $400 a month and say, come to the office, I need you to review these things or approve these things or that kind of thing, right? You have to think outside the box to get this. So you're going to want to separate all of that. That's not the whole list. The whole list for these people go farther. It also filters over to the accounts payable side to that, and the general ledger and recording. So you can see here, if you try to put these into what bucket is it? Custody, authorization, reporting, recording. Okay, now which one does it fit into and why not? And if they're able to do those things, then they're going to be, then there's the possibility that somebody, if you don't have two sets of eyes, there's the possibility that somebody could commit a fraud. So here's the other thing to think about, is that you don't want somebody to be in a position to both perpetuate a fraud and to conceal it, okay? So if I'm collecting cash payment from utility customers and I can also adjust their accounts, okay, I can conceal a fraud. I can. You know, how can I conceal that fraud? I can take, if they pay in cash, I stick that in my pocket over here, and then I go adjust their account and give them a credit. Yeah, that's a problem. You see what I'm saying? So when you think about that. Now, I am a person who, the way I've learned about these things is by reading, because I'm just a very, very honest person and ethical and all of that, and terrified of consequences of not being that way. So when I get stuck and I'm not good on fraud brainstorming, I'm just going to tell you, I call my son the lawyer. Okay, so if you have a lawyer that you can phone a friend, they think differently. They deal with transactions with money all day long. They think differently. And I say that jokingly because he's a wonderful lawyer, but he's got a little bit of larceny in his soul. And so that just enough that he can, I don't have any. He does. So I'm like, okay, what do you think about the, and he'll tell me, you know, at the same time, we're mother and son, we love each other. He'll call me up out of the blue and say, Mom, I need a reasonable person's opinion of this scenario. And he tells me the scenario and he says, what do you think? He gives me no background information. I'm blown out of the water by these out of the blue questions, but I've learned to really love them. And he's just testing, like you're just Joe on the street. What do you think? Is this right, or does this like not feel right? So we learn from each other. All right, accounts receivable, these are the people who post the payments to the accounts. So one collects, issues a receipt. The second person posts the payment to the customer account. You see how those two need to be separate? Okay, so what are they doing? So if you're the one who's posting those payments, you ought not be collecting the money. You know, you ought not to be responsible for the billing. That's the other thing. I can't adjust how much it's showing that it owes. You got to go talk to Susie over there. She did the billing. I'm just posting it to the account. Authorizing the write-off. No. That's got to go to somebody else. And approving payment plans, because sometimes we will have customers who fall on hard luck and they get behind in their utility payments, and we help them, which is perfectly fine, approve those payment plans, okay? So, nope, got to see that person, not me. All right, so then in payroll, we want to segregate that. What often happens in payroll, and to summarize this up, is that you have human resources that enters information on new employees, their wages, their deductions, making sure all those things are right, and then you have the person who processes payroll. The person who processes payroll ought not be the same person who does, who generates the checks, have access to the checks, okay? That's custody. Can't have that. Right? I process payroll, somebody else does that side of it. Somebody else goes on the banking software and approves the ACH transfer to disperse the funds electronically. Not going to happen. Ought not be reconciling bank accounts. For a lot of us, we have a payroll bank account that's different from our operating account. And so you don't want the person who processes payroll to be the one reconciling the payroll account. It makes sense to me, because they're the ones who know the most about it. And when they see a weird dollar amount, like, $395.42, they're like, that's so-and-so's paycheck. I know what that is. I can find why I'm off really quickly. Nope, can't do it. Segregate those duties. So in the accounts payable process, well, if you're the one who processes vendor payments, you should not also be doing these things. So I hope by now your wheels are turning and you're thinking, whoa, like, it's common. Look, I did accounts payable. That was my first little job when I was in college in the 1980s. And so I did all those things. I maintained the vendor master file system. I entered the invoices. I gave my list to the CFO. She decided what to be paid. I wrote the checks. She signed the checks. I mailed the checks. What does this say? That's an improper segregation of duties. That's not quite right. You need to separate those things. So involve other people or go back and forth with other people, okay, to get those things right. So you're going to want to do that. Purchasing. Basically, this one is kind of easy. You have to segregate it from the accounts payable, but, buying the stuff and then receiving the goods, 2 different things, and approving the invoice, 2 different things. Let's keep all of that stuff segregated. For that. And then our inventory, when we inventory items. So you're going to have to make sure that this gets properly segregated for that. So in our office, I'm going to be honest with you, because I do not know, well, I do now, but at first I had no clue what fixed assets were assigned, or capital assets were assigned to me. But lo and behold, should Diane Allison forget which assets she's responsible for, I'd get an email from our person who's in charge of inventory that says, Diane, according to our records, you should have this desk, this computer, and I'm like, okay, I have them all. And I'm so paranoid, like I'm looking for the tag number and trying to find where do they tag it on the file cabinet. They tag it, I'm telling you. They tag it, it's there. And why are they doing that? To have that proper segregation of duties on inventory. I can't report to you and say, this is what I've got. You can do that, and you can do that like maybe once or something. You don't want to do that every time, every year. That's why auditors will go and sometimes observe inventory. And speaking of capital assets, there you go with your assets. So you have to know, because what we do know is some people will order a capital asset, like Thomas talked about yesterday, and have it delivered to their home. Oh, no, that doesn't work. That doesn't work. It's got to be the capital asset of the town or my employer, my government. Where is that to do that? And you do have to have those. Banking is a big deal. Banking, especially those bank recs. And let me just say, I have been there, and this is what I have done. I worked with a wonderful judge when I was at civil court named Michael Bagnaris. I have the utmost respect for, and he taught me about a judge understanding of bank statement reconciliation that I have never forgotten to this day. And what I realized, the way I do it, and I understand it as an accountant, is very different from a non-accountant. I was not communicating with him. He helps me to communicate with him better. So if you have someone else reviewing a bank rec that doesn't know about bank recs, just educate them. Just educate them on the kinds of things to look for. We've had to teach principals how to look for bank reconciliations. You can teach people what to look for. You can't just say the head of your maintenance department, look at the bank rec. He doesn't know, not his area of expertise. But let me tell you, that dude knows concrete like no one else, okay? So we respect each other for our knowledge, but we can help him to understand how to review a bank rec. So we want to do that and segregate those duties out also for our banking systems. Can I tell you, access to the bank deposit or safe, I need to update that. You know why? Because it is also third-party payment systems. If you're accepting payment by PenPal or Venmo or something like that, okay, you need to have eyes on that also. Think of that the same way that you think of as a safe. Know what's in there, limit the access to who has it, and have controls for reporting every month and knowing that, because there are now 2 fraud stories on our website. If you go to all reports and you search investigative, so this is when you're having a bad day and you don't want to fool with anything else and your account's not reconciling, go read our investigative reports. I'm telling you, it will tell you how wonderful our team is, how a forensic auditor like Thomas goes and looks at these things and reports these things, and it is not personal, it's totally objective. The bank statement shows transfers, blah, 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 and they tally it up. They can tally it all up and tell you about those things. So you're definitely going to want controls in that. And then your general ledger reporting for that, so if you record those transactions, then you're not going to want to have access to these things. So you're going to want someone else to. So I know there's a lot of CFOs who are a little bit nervous now, because as a CFO, I have been a check signer plenty times. I have been the one that reviews and authorizes. I've also been the one to post a journal entry. But I know my segregation of duties, so I pull in like my senior accountants to help out. So just because I have all of that authority, and I know on paper, and when I was at the school district, you're the CFO, you have to be a signer. I'm like, dude, I'm not comfortable with this, so here's how the rule works. Diane only signs in these rare situations, and here they are. And that is documented. So when the auditor comes and sees 5 or 10 or 15 checks signed by Diane Allison, Houston, we have a problem, because it's so rare. In my 9 years at Ascension School Board, I'll never forget, me and Jessica Geeson, we will never forget, we signed 1 check. It happened to be our computer system went berserk. All of you guys who know your retirement system stuff, it's a do or die date where you write that check to the retirement system. Happened to be the day that the biggest retirement system, the biggest payment, I forget how many millions of dollars this was due that day. Jessica and I were like, there's no way to do this. We have to figure out a way to pay them. We went to the bank, shaking in our shoes. We're shaking. I need a check for $10 million. And I give them this stuff, shaking. We are terrible. I don't want to go to jail. I'm not armed. Just, They did a counter check. We delivered the check. We made a copy. We delivered the check. I survived. I wasn't fired from there. So what does that mean? That means that I made a copy. I documented the whole thing. The computer system went down. We had to get the money. It was $10 million. This is what we did. And then I went to the check signers, wrote out the narrative, and I went to the check signers. Could you take a look at this? Because ours needed 2 checks, so I had a partner in crime with my second in command, Jessica. We were both so nervous. We were just, it was rare, very rare, and that's my point. And I documented the very unusual circumstance, and when everything settled after the crisis, I went back and got the proper approvals and all the proper things, okay? That's what you have to do, because stuff happens, and we know that in our process. So mix and match, and that's my whole point. Like, these are the processes and these are the functions. So your inventory person may be a reviewer. Your accounts payable person may be able to record a transaction. Mix and match what they do with their function, and this will help you get properly cross-trained. All right. Non-compliance with the Local Government Budget Act. I love talking about the Local Government Budget Act. I will tell you, for those new to this, it's very, very hard, but Here's what the law says. The law says that you're required to present the budget. For most, not all, there are 2 exceptions. You have to adopt your budget before your fiscal year starts. The budget needs to be available for public inspection. You have to hold a hearing if you're spending more than $500,000. You have to give 10 days notice before the hearing. The hearing has to occur before the adoption. Once that happens, dude, you're not out of the water, because you have to monitor your budget and you have to look to amend if you have that 5% variance. And the law is unfavorable variance, meaning revenues are 5% or more below what your budget is. Expenditures are 5% or more above what your budget is. But our office says, you know what? To be a proper financial steward, you need to amend it even when it's positive. Why? Because if my revenues are 5% more than budgeted, I can probably do something with that money in my government. Don't y'all think? Like if sales tax money is coming in better than expected, maybe I can buy that vehicle. Maybe I can do that program. Maybe I can fund that construction project with general fund money. Pretty cool. So yet to be a good steward. And then you have to publish it in there. So there's the 5% rule, and then you monitor. You have to provide, it's one of the statewide AUPs, that you have to provide your financial statements to the board. Why? They adopted the budget. It's their responsibility to make sure compliance. They have a big role in internal controls because they have to oversee the CFO, the CEO, and make sure things are going according to the policies they've adopted. So you have to present that to them. You have to present them timely. They need to be accurate. Okay, it is not good. Now, things happen in our lives. We get a phone call that changes our life. Okay, like the day I got a phone call that my sister died, changed my life. But you know what? I may have missed the deadline because I got that phone call and I had to leave. But guess what? If I couldn't get that financial statement done that day, that doesn't mean I'm off the hook for the whole month. That means once you take care of your family and you handle all of that, can you get us a financial statement, Diane? You think you could get us one by the end of next week? I'm like, yes, I can. I will do that because life goes on after our loved ones die and we still have to come back and do our job. Okay? Happens to all of us. Life happens while we're working. It's just kind of, the two are not separate. They're intertwined, and we get calls like that. I'm not off the hook. I'm still accountable for monthly financial statements. They're just going to be late that month, and we can document that Diane was out from this date to this date because her sister died. But then she's back and she's good to go, and go look at my record. How often was I late? Okay? That's accountability. You have to have that in there. So I've kind of got this into 10 steps, and this is a whole nother presentation. I call it easy steps because I don't want you to think they're hard. They're not. They're 10 steps. It's not 3. Okay, we've got to go through this. So first we have to research, read that law. It's not enough. Go look at your policies, okay, because your policies may be different. Your policy may say that instead of by adopting June 30th, when your fiscal year starts July 1, you may say we want to adopt May 31st. We want to adopt, a whole month before the fiscal year starts so that we can get some other things done in that 1 month period and then go. So you have to go look at your policies. Develop that timeline, know what the law says. So adoption, hearing, notice, you've got to know what all those things are. It's not enough to say the law says we have to adopt our budget by June 15th, because don't write June 15th on your timeline till you pull out a calendar. What if June 15th is a Saturday? Okay, you may want to look to your policy. You may want to be one. My son, the lawyer, would have been one who would have gone toe-to-toe with you that said if June 15th was a Saturday and you adopted it on Monday, you're good to go. Diane was the other way. I said, I don't want a gray area, so I'm going to adopt by Friday if June 15th falls on a Saturday. That's just how I am. That way, me and my auditor do not need to engage in a discussion on what happens if it falls on a weekend or holiday. Pull out the calendar. Pull out, you have to know the other thing I learned the hard way, okay? Official notice in your paper, it's not the day that the paper comes out. It's X number of days before. You have to find out what that is to get it to them, okay? So don't let that come back to bite you on your official journal. And then you're going to work on the point about number 3 is that a lot of times you need the people involved, the people that you're going to hold accountable for controlling those costs, let them come up with their budgets. They may not always get what they want, but give it to them. I cannot come up with a budget number. Diane, how much do you need for travel for your entire department? We go out and visit a lot of governments and help them out when they need help. We'll go on site. $40,000. Well, I don't know, is that a lot of money or a little money? So that number doesn't make sense. And some of you would say, man, I'd love to have that much money in my travel budget. And others are, you're like, that's not enough. That's just not enough. It doesn't exist in a vacuum. So you want to give them last year's actual, this year's budget, how much they're coming so far on their budget for things like that. So that's what you put in a worksheet. You're going to create that first draft, estimate your revenues, go to the authorities, look at your expenditures. You're talking with your insurance agent, like how much is insurance going to be this year? You're going to learn, you've got to go look up, what are my new retirement contributions for that kind of stuff. You're going to do all of that stuff. You throw it in the hopper, and then you're on, you have to create that balanced budget, and that's step 5. So it is not good financial stewardship at all to spend more money than you take in a year, okay? Don't do it. It doesn't last. Credit cards do not help implement or increase your revenues. It is not a way to increase credit cards are not revenues, okay? So you're going to have to make some hard decisions. So make those hard decisions. Do not kick the can down the road. Do not do it. What you have to do is, this is what you get paid for. Elected officials, CFOs, this is what you get paid for. I've got to apply this phenomenal brain that I have. If you need help with AI, go ask. But you've got a phenomenal brain. Nobody knows your government like you. And you're going to think, where are the places where we're spending too much? Diane does not need $40,000 in her travel budget. I think Diane would be fine with $15,000 in her travel budget. You have to know that. That's the kind of things and you have to go tell Diane. Diane's going to be angry. I've got to cut my travel. I'm not going to be able to reach as many governments. Figure it out. Get a tiered system that says, only in these situations will we travel to governments. Not every time they ask us. Things like that, right? You can do this. You have a great brain. You can do this. That's the hardest part. Once we get the numbers right and we have that structurally balanced budget, and for those of you who work in politically sensitive places, and that can depend, and that changes on a dime. Everybody's getting along, and all of a sudden they're not getting along, okay? You're going to have to allow more time for that negotiation, for that step. Once you get your numbers, you're going to write your budget message. Yes, the law does say these are the things that need to be in your budget message. So you're going to want to get them there. It has to be signed by the chief executive. I use that word to say your mayor, your superintendent, your sheriff, whoever your highest elected official is. But you may also want to, as finance director, say, I'm pretty proud of those numbers. And sometimes your CEO wants to say, Diane, I want your name on it as well, because this is your work and these are your numbers, and nobody knows these numbers like you do because you've gone over them a gazillion times. Then you're going to want to schedule all that stuff. Go pull your timeline. Start getting all that stuff together, available for public inspection. Hold your hearing. Put your notice in the paper. And then you're going to want to adopt that budget. There again, best financial stewardship, best practice. GFOA has this too. Before the fiscal year starts, not after. School districts have until September 15th, and I think parishes have a few days after that they can. But for most of us, adopt it before. It just makes better sense to do that. It is an estimate, like Jennifer said yesterday. It's not going to be actual. It's going to be different. But you know what? It's your best estimate. It's well researched. You're pretty good with that. And then you're going to want monitor and amend. All right. Late filing of the legislative auditor's report. We really touched on this. This is it in a nutshell. I mean, at the end of the day, what kind of report do you have to give? When is it due? So for the wonderful souls who are blessed with sworn financial statements, and they would tell you they are not wonderful souls and they're not blessed, because generally they're very, very small governments and they're not used to doing that. For the rest of us, a sworn financial statement is like an income statement and a balance sheet, and it's got a balance, and sometimes it doesn't. So it's harder. Those people have 90 days. They have 75,000 or less. It's like a lot of those are justice of peace and constables and a lot of nonprofits that may get just a small grant. That's what what they have to do. For the rest of us, 6 months after the end of your fiscal year. That's what you know. That's what you live by. You know that control environment that we talked about? Everybody needs to know. When's the audit due? 6 months after the end of the fiscal year. Okay, we're getting close. Needs to be on the agenda, like Dennis talked about, to present to the governing body. When are we going to do that? Okay, that's part of your control environment. You need to know. End of discussion. Let me just explain to you something that's going to rock your world. If you are on the border between these two, particularly if you're getting a compilation, so you don't have $200,000 in total revenue yet, but you're teetering, and you all of a sudden have to go to get a review, can't be the same CPA in a lot of instances. In some instances it can. Here's why. The CPA that does a review and an audit, they're expressing opinions, okay? They have to be independent. The one who's doing your compilation does not. Diane Allison sits there in my little bookkeeping client and reconciles their things, all of their things, and gives them financial statements. I am not independent. I am making financial decisions for that client. I cannot audit. So if you're thrown from a compilation to a review, you get a new grant. It throws you over. This is real common. You may have to find another auditor. Remember what Dennis talked to us about. Get them on early. So be in constant contact with your auditors to know, and your contract accountants, and when they're starting to see this, it's like, dude, we're going to have to find another auditor if ours isn't independent. If you don't know whether or not yours is independent, ask them, they'll tell you. And then be aware that when you're on the other side and you're going from a review to an audit, it's going to cost a little more money because now you have to have those statewide AUPs. If you're going through them for the first time, you're just growing and you're going to have some exceptions. But you know what? They make you better when you solve them. They make you better. They teach you things you didn't know. And the objective of statewide agreed upon procedures is to correct internal control deficiencies. That's what we talked about. Our most common audit finding, to correct. Not to make you better, not to do anything that you ought not be doing. These are things that you should be doing. It's just to correct them. So a sample audit timeline, just to kind of go through in month 10 or 11, that means before month 12 is the end of your fiscal year. You know, meet with your auditor, tell them what's going on, tell them about new grants that you got, tell them you may have borrowed some money for the first time, and now they're going to say, okay, we've got to add that in our plan to go audit those kinds of things. And then, you know, what do you do in the first month? You do these kind of easy things. Make sure that you do that compliance questionnaire in the first month, because as Dennis talked about, they use that to audit. They don't want to wait. That's not a document that's on their list that says I have to have this in my work papers that you give them at the end of the audit. No. You give them that at the beginning of that's the compliance piece of the audit that's required in governmental accounting, generally accepted governmental auditing standards. Compliance piece, okay? And then you're going to keep working through this. Once you give your trial balance to your auditor, guess what that means? If you're still working, and some of us are still working, we tell the auditor which accounts we're still working on, okay? Capital assets was always one of mine that I didn't have ready when the auditor wanted it, but I had everything else ready. And so I would tell them that. Once you give it to them, don't go making journal entries in your accounting software. You have to write it up, document it, we're going to talk about that, and you give that to your auditor and let them know. Let me tell you how this goes. It goes two ways. Number one, if I catch my own stuff and I fix my own stuff, I'm good. If I don't and my auditor finds it and he has to post an entry, I have a finding. That's kind of how this goes. So it's okay. Your auditor is going to ask. They need that. They do so many things with that trial balance. They're going to ask. Let them know. And all the things that he really wants you to have done, like your income statement, make sure you get all of that stuff done. Tell him the things you're still working on. He's ready. He's good. Okay, he's good. So, like, I have a few more grants I need to record. They don't like that, but he's going to say, what grants, how much money? And he's going to put that in the back of his mind. okay, and things like that. Let them know, but don't adjust your trial balance after you've given it to him, without letting your auditor know. You're in a partnership. You're good to go. You know, they appreciate the conversation. They appreciate that you caught that. You know, maybe I forgot to record my debt service payment. Okay, let me get that done. Finding things as I reconcile. And then the auditors will come and start their field work, as Dennis talked about. You know, they do work that you don't even know about. They're thinking about your audit when they get assigned to it, you know, and way back in the office. And they're just thinking about this, researching, figuring this stuff out long before they ever show up on your doorstep. They've done a lot of audit work by the time they show up to do the field work. And then there are also IT audits that they have to do that happen behind the scenes. So usually they ask you, who's your IT guy? You tell them, and they go look. And they ask you questions about your software. It's called SOC 1 and SOC 2. And then we call them left and right, but they call them SOC 1 and SOC 2. Okay, and then after our fiscal year ends, close to that, we're getting close now to our deadline. It's 6 months, right? So we're in month 4, month 5, depending on how big your organization is, how many people you have, that kind of thing. We're looking for those contingent liability letters to the lawyer. What is that? That is because your auditor, you can't, you know, one time I'm so smart. Sometimes I think I'm so smart, and I'm not. Okay, so I'm saying I'm going to get a hold of that contingent liability letter. I'm going to send it in July. I sent the letter in July with the June 30th fiscal year end. Guess what my auditor did with it? Diane, it's no good. It has to be dated within 45 days of their opinion letter. So yeah, it doesn't work. Why? Because in all those ensuing months, we could have got sued. So they do that close to the end to get those liability letters out. And you get that draft. By now you know, I have my draft I can look at. I don't like the way this is worded. I know what my findings are. I know what my management letter comments is. I can still negotiate. I can still maybe, when they're telling me this, I'm like, no, we actually have that documentation. Let me show you. It's over here, blah, blah, blah. And they're like, oh, okay, that's good. You know, or it may not be good. It may not fix the problem. But you get to have those conversations with that. You have to provide that response. And then you're going to, so you get to look at all of those things, and you know what the answer is, okay? And then you're going to finalize it, present it to your governing body, send it to us. You're not done. You're not done. You still have to go to others. You may have to send it on to regulators. Like if you have a single audit and your auditor helps to take care of that, but you've got a responsibility in that process as well, that needs to go to the Federal Audit Clearinghouse. And then you're still not done, because you need to have that debrief. How did we do this year in our audit? You know, what did we do right? What did we not do right? What could we have done better? You know, and some of us, I know one of the questions when she asked, how much lead time should your auditor give you to ask things? So your auditor, I'll remember this because it happened to me. It actually had me crying. Like, I need you to do, it's always the capital asset thing. I was brand new. It was my first time being at this organization. I need you to do this capital asset, and they didn't have the module, okay? So where I came from, they had a module. This one didn't have a module. Spreadsheet. And it's like, I can't tell you, it took me 3 weeks to do it. Your auditor asked for that. I'm like in tears. I called one of my auditor friends. I was like, can they do this to me? And she said, yes, they can. And the answer is yes, they can. They can ask you for anything they want. You need to abide. And so, yes, you will do that. But what will you do in your debrief? That is one mean, nasty spreadsheet that takes a lot of time. I'm going to get started on that one early. So that's your note to self, and that's what you learn. What are we talking about? Continuous improvement. To have that. All right. So, and then Barry went over the extensions. So let me show you some good work. Here's how the extensions are ebbing and flowing through these years since 2018. Liz out there told me when I was new to the Legislative Auditor's Office and I first did this, she said, Diane, you have to go back a few years before COVID to see what was normal. So in 2018, there were a total of 84 extensions. That must have been a non-hurricane year. And the vast majority of those were non-emergency. So fast forward and what's going on, and you see the list. And Barry talked about, this is where we can pull this list from. These are the storms that happened. These are the emergencies, the gubernatorially declared emergencies. Some of us have no clue about the Tiger Island fire. Why? Because it was only Bienville Parish. So if I'm located in EBR Parish, I can't say Tiger Island fire. No, that dog don't hunt. That did not cause you to be late on your audit report. That's not an emergency extension just because it's an emergency, okay? So as you go through and you look at these things, you see the COVID years, and then you see the storms. So look, COVID 2020, remember March 15th, 2020, is when we all got told we have to go home and quarantine. And it went up, and look, it shifted over to emergency. Why? Because COVID was a declared emergency. So that's happening in 2021, and look as it goes. Aren't you proud of yourself? From 2021 to 2022, look how much you lowered them. You were getting them done on time. You guys, both auditors and auditees, you're working through your staffing and your personnel chain and all of those things. And you're like, we are going to figure out a way to get this done. And we did. And those emergencies were one time threw you off. And then boom, here come storms. Here come storms, particularly our friends on the west side of the state. And so what's happening? But if you look now, you will see in 2023, we've had a reprieve from storms. So I will tell you, all of the employees at the Legislative Auditor's Office sit there and pray all the time, Lord, please don't give us storms this hurricane season, because we know it's going to affect this chart. And the Lord hears our prayers plenty times, right? And we have nothing against the Florida people, but we're glad it went to them. You know, we know our time is coming, and with no harm, because they're saying the same prayer we're saying. All right, so that's happening. So now you can see that they're shifting to non-emergency. So we've got to get better when it's non-emergency, outside of management's control and all of those things. And this is what it looks like on a graph. So that big blue line, dude, that's the emergencies, like boom, and that's what happens. They just last for a short period of time and they're gone, you know, but that yellow line, that's the non-emergency ones, and it's kind of creeping up, and that's the one where we want to say, can we get that to go down a little bit? Inadequate grant administration, I've got 20 minutes. Okay, so I don't want to go through this in great detail, and I will tell you this, GFOA has a great best practices on grant administration, and that's what a lot of these slides come from. So let's kind of summarize. You have to know your grant. You have to know the plan. You have to get people who are trained in the program. You need to have your function. You need to have your accounting system to monitor those grants. GFOA recommends that you have a code in your GL stream that can separate grants. One of the worst experiences I had to do was we had the almighty miscellaneous grant fund, and I had to spend, don't ask me how many months it took me to straighten all that out and separate all these different grants. I said, never again. We are giving each grant its own fund. It is that big and important to me, and I don't want to spend that kind of time reconciling it, because you do need to reconcile it. So you have to know these things. You need to reconcile. You need to know very, very big. Somebody is in charge of, usually it's a program person, the kind of costs that are allowed. Yet costs have to be reasonable, necessary, okay? You have disallowed costs. You don't want to go there, okay? So you need somebody who really, really knows this, and they're not enough, because bless our hearts, those people, they love their programs, they're passionate, they love what it's doing, but they're not finance minds. So you need a good accountant to say, I kind of don't think so. I'm not seeing this the same way you're seeing it. And so maybe we need to record that as a general ledger expense and don't do that anymore. Okay, so you may want to have a check and balance on that kind of thing for your grants. And then we talked about those things. Capital items, if you use grant funds to pay for any capital assets, dude, you have to account for that thing no matter how much it costs till the cows come home. You have to know where it is at all times. Some of those things, like in a school district, we had one copy machine that was special education only. It was funded by a special education grant. Nobody else can print to that copy machine. Don't do it. Don't do it. You know, so you have military police standing there. Don't print to the copy machine. Okay, kind of thing. You have to know those kind of things to do that. You want to have those internal controls and make sure that you're complying with that. Make sure that you're getting accurate information. Subrecipient monitoring, if you are a parish or a city and you give grants to nonprofits to carry out things, you're not done when you write the check. You have to make sure they're following all of that, that they understand the program. You are not done, so you're going to want to make sure. And if you are a subrecipient, then you know, because they're saying, send me that report. I need to see your financial statements. I need to see this. I need to see that, because they're watching you. So to do that, so you're not off the hook. You definitely want to have that communication with that, and then you have to know specialized reporting. So a lot of us got hit. We were very thankful the day the American Rescue Plan Act money arrived in our bank account. Some of us were absolutely terrified of that money, but others were very thankful, but there are strings attached. You have to report. When do I have to report? Guess what? That timeline changed. Where do I have to report? Some new place you never were before. What happened when that came out? We had problems with the portal, and then we got those straight, right? You need to know that kind of thing. And I wish I could give you a list of grants and reporting requirements, but I cannot. Okay, so you have to know those things, and you just have to learn. There's no substitute for just sitting down and learning when you get grants and just really absorbing it. And then you have to comply with, like we say, generally accepted government auditing standards on that, and there's a whole nother layer for that. You're also going to want to look at your grants at the end. Was it worth all those strings? Was the cost benefit there? You know, if you had to hire people just to monitor this grant, you know, a lot of people are saying, and I see them in school districts and in municipalities, thank heaven that CARES Act money's gone. Like, that was a lot of work. That was people and chaos and rules changing all the time and lots of money, and we thought we wanted that, but when we go through this, it was harder than it appears, and we're kind of thankful to be back to our new normal with the things that we know and love, that we're familiar with. GFOA recently put this out a couple years ago now. We did a best practice on CFA preparation because we see a lot of findings. So here's how this works. This is a schedule of expenditure of federal awards. Let me tell you, that's different from the list of all the grant money that you were awarded this year. So it is the expenditure of that money. Sometimes that works very differently. Ask anybody who ever has a FEMA grant. Okay, the timing can be way off. You may not get your money for 5 years, but for that. So you have to know it is your responsibility, not your auditors, to create your CFA. Okay, so don't be too scared by this. Go look in your audit report. There is one. It's kind of easy things. You can gather this information from information that you have on your grant awards document. So if you're when you get grants, make sure you have a place, some system for gathering all those documents together and being able to look at those things and knowing all of these things. You now have to list not only the dollar amount, but if you have subrecipients, you need to list them by name. You know, this nonprofit was, you know, handling our animal shelter, something like that, right? You're going to have to list those out. That's new on the CFA. And so you have to do that. So what's the best way to get a good CFA? Again, you know, kind of theme of this program, our spring program, is just reconciling, just knowing your things and reconciling to those and doing that. Start with your prior year CFA. That's a good point to make if you're the sole who has to do this. And so then you need the crosswalk. Like prior year, we had all these grants. Current year, these are new ones, and these are ones that ended. And so this is what my fiscal year, because program year is different from fiscal year. You're the one, an accountant, you're like fiscal year, okay? Your program people are program year. So now you have to say, as of June 30th, like you may have federal grants that go to September 30th. Well, June 30th, that's different, okay? So now you're going to look at that, and that's how you're going to kind of come up with what should it be. And that at least gives you the universe for your CFA. And then to go reconcile it. There is no, we get this question a lot, my CFA was wrong, do I need to change my audit report, you know, reissue to fix it? And the answer is no. You just record it in the notes for next year of what happened for that. And I can tell you, some people don't take, I was one of them, the CFA real seriously, like I couldn't be bothered with it. But what you learn is that the federal government really looks at this, and they use this to make a lot of decisions. And when financial information is used to make decisions, you want the best, most accurate information. Leads to a good decision, right? Inadequate information doesn't go that way. Okay, So speaking of that, let's talk about inadequate reconciliations. Again, theme of the conference. Bank statements, you've got to get them done. You've got to get them done. They're a pain. Some are very hard, but you have to know that. There are plenty that are not, okay? Get them done. They need to be reviewed in writing. It's not like the mayor set eyes on it. No. I need the mayor to sign that I reviewed this bank rec. For that, and then include all of the documentation. So for example, you often have, if you're writing checks, you have a list of checks that didn't clear the bank, outstanding checks. Not enough. Tell me the month that the check was dated, tell me the check number, and tell me the dollar amount. Needs to be in the packet. Why? Because one way we learn that fraudsters do things is take a number like that without documentation and they just force a reconciliation. You know, on the deposit side, if you are reviewing a bank rec and you see outstanding deposits, can I tell you, by the time you get it, by the 10th of the month, you ask your CFO to say, can you give me the current month? Go print out a printout of the bank statement for the current month, because that bank deposit that was outstanding on the 30th of the month needs to have cleared by the 1st or 2nd or 3rd or 4th of the next month, okay? Because it might have been a weekend, a holiday, whatever, but if it's not cleared by the time you're looking at, there's a problem. That's another very common way that fraudsters will manipulate the records, is they will show something as an outstanding deposit, sometimes for years ahead of time. They might record the deposit in the year 2050. It's 2025. That dog don't hunt. Okay, so it could look as an outstanding deposit, but dude, it wasn't. So if you're one reconciling, that's an easy one to do. You shouldn't have very many of those, and they should clear very soon if you're making those. Resolve your old outstanding items. So this is the common way. This is like my bank reconciliation had two sides. This is where I go from bank statement to general ledger, and it's just the bank statement, and you're gonna add those outstanding deposits, subtract outstanding checks. It's as simple as that. And that's my GL balance. You may have outstanding ACHs. And then to the governing body, this is the Judge Bagneris reconciliation, because he asked. And when you do it this way, and you go from general ledger to general ledger, and you list it by the major revenues that you get, and when you show those disbursements, why do you put check numbers and ACH numbers? So you can see the volume of checks and ACHs that are done in a month, and you can see how many of those are done. And you don't just say transfers out, you say transfer to the payroll account, transfer to the roads maintenance account, transfer to the capital projects account, so that they can see what you're doing, and they know if I get sales tax in, I know that some of that sales tax is dedicated to roads. I need to see that that transfer went out to my roads fund, okay? So that's what you show them. Show them payroll taxes. Why? They are personally responsible for the payment of payroll taxes. They want to make sure, Diane, it's your doggone job to pay the payroll taxes. Did you pay them? Let me see how much. And it's like, whoa, that's more than my house. You know, that's terrorist. So you just don't make a mask, show it to them, those kinds of things. So when you put it this way, it's easier for a non-finance person to be able to, and you separate out the major things that your governing body is interested in, and you may provide that to them. So some will take this reconciliation form, they don't provide the bank statement, but they may show it this way and show, you know, this is what happened. So this can kind of be like a cash flow for them. And then you just have to reconcile till the cows come home. So why? Because we make data entry errors. Anybody who does key punch makes data entry errors, okay? We do. It's not intentional. It's because we're tired, or one of our team says, it's because I have a fat finger, so I meant to hit something wrong. If you've been doing this a long time, you're probably like me, and my most common mistake is between 2, 5, and 8. They're right in a row in the middle of the keypad, and I know right away that's where I have to look for. That's my weakness, right? So you know those things. So just keep reconciling. You're not sure. And what you're thinking in your mind is, this is what my GL says, but what should it be? Now I have to think creatively. How do I know what it should be? You know, and so like if you're using a subsidiary ledger like utilities or traffic tickets, you're going to go pull reports from there and say those kinds of things. When you think about accounts payable, you know, how much I owe all my vendors need to add up. I need to print a report that's my AP aging, and the two should be the same. Why? In some accounting software, you can post journal entries to your accounts payable account. And in other accounting software, the better accounting software, you can't, because it has to go through a vendor. Same with receivables. You can't post to an AR. You need to go through a customer to, like a charge or a credit, to go to your accounts receivable balance. But some of our software isn't that sophisticated. Some of our software gives you a little warning, like you may not want to do this, and you're like, what the heck? And you just turn that off and you go your merry way. So now you're out of balance, okay? So we had like an other accounts payable. That's what we posted journal entries to. But our accounts payable tied to our aiding. So just think, you know, of what these things need to be and where things could go awry. And they go awry all day long on that. So reconcile. Reconcile where you're weak. Can I tell you where you're weak? Go back and look at audit adjustments and see what your auditor's done, see things they've pointed out, and say, ooh, I got to get better at that. You know, I hated it when due tos didn't equal due froms. My auditor pointed that out, and I'm like, I got to get this right. I do not like my auditor telling me that I did things wrong. I want to find out my own mistakes and show them that, look, I got it right this time. You know, so when you know those things, you can fix those things. Poor records, can I tell you, the biggest thing at the end of the day, just respect the accounting records. Your accounting records are due a lot of respect. As Thomas pointed out yesterday, one of the statutes is maintaining your records, not shredding them, taking care of your records, just show them respect. So if you are like Diane at the moment and I don't have a lid on my water bottle on my desk, that's a problem. I need to put the lid. I need to have something with a top so water doesn't spill all over my accounting records and now I can't read the ink, right? So think about that. Just basically at the end of the day, show those. Back in the day, I forget, early 2000s, I think it was, audit evidence needs to stand alone with no verbal explanation. This is what auditors know as SAS 109. I don't know what it's called in the clarified standards, but I remember this one because it rocked my world and I use this constantly. Audit evidence needs to stand alone. Remember I told you about that exception when I signed a check? If I had not written a narrative out and got the people to look at it later, then the audit evidence that my auditor would have seen when he pulled that, and they're going to pull that one, let me tell you. They are going to pull the biggest check, one of the biggest checks that you ever write out of your operating. They're going to pull that one. That's just kind of goes, all right. He wouldn't have known what happened. He's like, Diane, you violated. But because I added a narrative and I had those approvals in hindsight, he could tell with no verbal explanation what was going on, what triggered that event. So that's where that's the gold standard. And sometimes we can't see that because we're the ones, you know, we can't see the forest for the trees, right? We're in the weeds. But when other people point it out to us, then you know, write a note all day long. Just document, just say what happened. It's okay when things like that happen. Like I said, it's okay. It's not the usual way, it's the unusual way. So be able to tell your story, because I don't know if you're like me, but I do not remember why I did what I did last November. Why did I write that in an email? It's March. Dude, that's out of my head. I have no clue. So, you know, to answer the Diane, what were you thinking? Sometimes you're trying to like, okay, let me document that and stuff like that. Okay, a lot of what Dennis talked about we won't go over, but this is what they're doing, and this is what they call the assertions. We make these assertions, they're checking to make sure we're right. Okay, on those things. So for transactions, for account balances, and that's all the documentation that they're asking for. So what's the kind of proper documentation that you're going to need? So this is the kind of documentation, and we don't have time to go over these in great detail, but if you are deficient in this area and you have this finding, take a look at some of these slides and say, okay, make a checklist from these things, because you don't know what all of these are. Credit cards, goodness sakes, you need good documentation for credit cards. You have to have itemized receipts. You know, you have to have the card holder take responsibility for the charges on their card. You have to have the statement and the documentation reviewed by somebody that's not a card holder for that. Your capital assets, yes, when they change hands, you need to have, and when any asset changes hands, get signatures. You say you gave me $100, but I say you only gave me 80. If we have a signature, then you're gonna count it out right there. And I'm gonna say it's 100, you think it's 100? Yes, it is. We both sign, we're good to go. But if we don't have that, then it's my word against yours. Did you give me 80? Did you give me 100? I don't know. Documentation for journal entries, payroll. So this is all kind of there so that you can see. And there's all kinds of other documents. It's just important. Just have this stuff and just remember nothing else. Just it needs to stand alone with no verbal explanation. This is easy to solve. Just give them financial statements. I mean, at the end of the day, just give it to them, you know. So here are things that you need to do monthly. That general fund budget to actual. In addition to that, give them a balance sheet. Let them know your assets and liabilities. You know, give them that variance, that explanation in writing of what the major variances are. Optional, you may want to give them some other information that's good to help them in their oversight. And then quarterly and twice a year, you're going to want to do those. Why are those things bolded? Because some of you recognize that's one of the statewide AUPs to have to do for that. And then, you know, your period closing suggestions, getting that all done. There again, that's getting it done timely. Period closing means your months as well as your fiscal year ends for that. This is a sample of that provided by client list. It's just the beginning. Yeah, as Dennis talked about and plenty other people alluded to that, Barry, all of that, this is a good place to start, particularly if you're brand new to being the one that's the key contact in the audit to go get that. And then inadequate or lack of written procedures, just do it. Don't argue. I argued. The first year that statewide AUPs came out, or maybe it was the second year, I did not have a written policy on contracts. We don't need one. We do it right, blah, 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 blah. Diane, the statewide AUP says to have a policy and addresses these things, have a policy. I said, okay. And I did a policy, and I did a template. And guess what? We were so much better. They're right. They're absolutely right. And once I got out of being defensive and acting like I know everything when I don't, okay, and I'm settled down, I can look objectively and say, they're right. I see why we need that. That was a hole in my internal controls. So at the end of the day, when you have this is our most common statewide AUP exception. You know, just do it. Don't argue. Just do it. You will be much better for it. So to have all those. And then there are some, we talked about the benefits of having it in writing. I just want to talk about a signature because nowadays a signature is not a signature. It comes in many shapes and forms, and so there is one of them that looks like, that's what my husband's signature looks like, and I'm like, dude, that doesn't work for me. And your auditor will ask, whose signature is that? And you have to say. But you may want to have now in writing all these years after COVID about when digital signatures and wet signatures and all of those kinds of things are required, okay? Just something for you to think about. Improper use of public funds, that's the Constitution. And this is the Cabela's test that Jennifer talked about, okay? So this is the requirement for you to look at your use of proper funds. This is just, does it pass the smell test? If it's gray, don't do it. If you think you're gonna have to defend to somebody why you did that, don't do it. Just say, nope, I'm not comfortable with that if you're in that position. And so here's some fun questions to ask. Because we see these, I pulled these from a list of findings. The answer to all of these questions is no. None of these are appropriate, okay, uses of public funds. So should you want to know, the answer is absolutely not for that. And restricted funds, that means like when you are levy a tax for a specific purpose, don't use it for another purpose. Use it for that. And then non-compliance with public bid law, I'm not your man, I'm not talking about shopping. However, this is on our website, and this is like the short answer to that. We've got lots of information on our website about public bid law, so this one is for materials and supplies of what you need to know. So with that, I want to say thank you so much for your attention. Thank you for being here and your participation in the program, and I will always say you are armed with knowledge, go forth and conquer.